Good morning, traders, and welcome to another Market Insights video with myself, Stavros, provided to you, of course, by Orbex. IMF downgraded global growth once again from 3.6 to 3.3% for 2019. That happened yesterday, citing Brexit and, of course, the spillover effects from trade war. Now, aside from US and China talks, of course, now President Trump threatened imposing tariffs to the EU, this time for subsiding Airbus, which seems that the US is very keen to challenge Europe next, and then when done, of course, probably find the next victim. Well, as a result, safe haven yen rose, our favorite commodity gold rose, and WTI oil gains were capped near $65 per barrel. Where are they heading from here? We will have a look just in a minute. Let's have a look quickly now on the economic calendar first, because today is Wednesday, the 10th of April, and we finally have a full busy calendar. We're expecting industrial production, manufacturing production, and the trade balance from the UK. And of course, ECB rate decision, and then of course, Mr. Draghi's speech, US CPI, core CPI, as well as the EIA crude oil reports, very critical for oil and gold. Okay, now just a note on the ECB, the question everybody is got in their mind, is Draghi going to maintain the same language on this meeting, or is he going to go more dovish compared to the last statement? Well, I mean, really, there is not much room to go further down, but the thing is that I personally would be surprised, okay? Plus, there is also rumors that, that say Draghi was considering to adjust the current policy to last longer, okay? Now, if the rest of the members are going to accept this is still, a big question, because Draghi is leaving his post in October, okay? But nevertheless, we're going to find very, very soon. Let's jump to the charts quickly. I want to start with the daily oil. We have prices finally did this double wave to the top, okay, and reached a very strong support level, which now is actually a resistance, so a dynamic level. We do get a very tiny signal, bearish signal on the MACD, on the daily, and this is why we could be expecting a correction, okay? The question is, what is happening in the shorter time frames? Okay, let's have a look. Now, in the short time frames, the prices actually went along exactly as we expected last week. It's just that they crossed a little bit higher to my expectations personally, and they reached this 62.20 and even higher. Okay, so we had this false break, and now we could be looking prices to start correcting because we receive multiple signals on RSI and MACD. Okay, down on the 1 hour. Let me delete this quickly. There we go. Down on the 1 hour. So we see as well 3 different supporting signals, MACD histogram, the MACD lines, and also the RSI. We see a false break above this level and then another break up above this level. Now, the level we need to see breaking is this, okay? Because we received a retest here. It could simply be a short, B, and here is the C correction. But we will find out very soon. Now, is the 64.40 going to last or not? The thing is that my Bollinger Bands are sloping to the downside, and they are not following a breakout, okay? And my middle Bollinger Band has held prices below the moving average, which means that we could see prices moving along something like that. That depends, of course, on the EIA report and what happens with risk in the next following sessions. But in the longer term, I'm bullish on oil, and that is because accommodative policy from China starts again, bringing risk back in the market, risk appetite, okay? And the US dollar as well and Fed are looking to keep rates unchanged. Even, there is fears that they might cut, as the US yield inversion provided like a week or 2 weeks ago. Let's go quickly on gold. Prices are moving as expected, again, from it's been like 2-3 weeks now we'll be talking about this move. If this level holds, we are going to see the deeper correction. If not, then we have to reconsider what's going on. RSI is also in formation here. The MACD pushed prices up as expected. Now, if we're going to see the RSI breaking above that, that will be a signal that we might see prices moving a little bit higher, maybe outside this trend line. Or, I mean, the worst scenario would be to get close to 1340, but not above this level, okay? Anything above here would invalidate bears, and prices will just jump, will just go higher all the way. Now, down in the 4-hour chart, again, we are seeing these two signals pushing prices to the upside, and now a rejection near 1307, which is a previous, I would say, a good activity level, okay? No surprise, a false break over here, okay? And we could see prices moving lower, okay? To 1395 or even the 13 psychological next. We could see prices consolidating, but nevertheless, a signal down here tells me that we might see prices moving a little bit lower within the next few sessions. It depends, of course, on the ECB, okay? On the 1-hour chart, again, we see 3 signals this time, okay, all bearish. And after completing this impulse wave to the upside, we could see now an ABC correction, or we could end up having a triple wave down, which will be another impulse to the downside. And from here, of course, we would be expecting prices to now to receive further close pretty much. See, are we going to see this level, breaking or not? It's very critical. The 1280 is a very good support zone, and this is the break we would expect to break the price, the level we would expect to break to see the deeper decline. Otherwise, then another move here and a rejection would see prices moving again all the way up, and here's where we'll start receiving further clues. So I want to thank you for watching us for another day. If you like the video, share, hit the like button, and don't forget to visit our blog. We cover all the news, we provide trading ideas, and also all the tools you need to become a little bit more successful in trading.